Hello folks, LA here. I'm doing a video to bring to you the ideal that uranium stocks. It just may be time. Now, a little bit early, but we're getting there. Let's start with the URNM, which is the ETF, the Sprott ETF, which is kind of an amalgamation of all of them. And what I want to show you, is what you already know, which is that this thing has been on a downtrend for a long time. And now you're starting to get something back to the upside. Anytime you've been in this type of a downtrend that you see here, right? Long secular type decline, cyclical or secular, in this case cyclical. What you want to see is you want to see bearish retest regions taken out. And that usually starts with the daily. So if we go over here and find our lowest swing point low, this is it here. And what happened? You took it out right there. So you got over the high of the low. That's a break to the other side. That says that what was down, no longer down, more likely it's sideways at worst, potentially going back up. The way you'll know that is you'll start breaking swing point highs. It's an early warning sign that that's probably what you're going to do, and you got two of them congruent right up in this area. That's a good thing, right? Because that says that when you break one, you probably break two, which would turn your trend back to bullish. And so URNM on the daily, you can see right now sideways. It's probably going bullish pretty quickly. As a matter of fact, it just went sideways. Now that I look at it more closely, there's an H right there. And so you went sideways on that break of that swing point low in retest region, and this one here as well. So still probably going up here to break these. That's the direction. And that's a good thing. Now you can also see there's a lot of stuff in here. I'm not going to cover everything, but you can see short term you got a confirmed up to 35. The 35 is just right about there. And then longer term you got a 67 number. Still got a bearish one potential out there, but I think that one's probably off the board because it's already been reset twice. And usually when that happens, you're not going to do it. Now let's go to the next time frame, which is the weekly. To really get this thing to turn, you're going to have to break a swing point low on this time frame, right? And this is stretched 77% now. So in other words, it's been going down a long time, which means more than likely it's going to break a swing point high. Where's the high? It's up here right now, and that's probably going to stick. 1, 2, 3, 4, 5. You potentially could get a swing point high here if we don't get up there fairly soon. You need 6 bars to do it. So another week without getting over that price point, which is 36.53. In any event, however it's going to happen, you're going to break a swing point high. You're going to reset this guy. But what you really want to see is you want to see this taken out. So the first time back, it hasn't been tested. I don't believe. Let's check. 37. Excuse me. The low is 36.91, and that high right there is 36.91, so it was tested. So this would be a second test on the way back, which would mean you probably get up deep, which is up in there somewhere, and then potentially pull back and try to go up again. Let's go to the monthly. On the monthly, you haven't broken down, but what you have done is you lost right there a bullish retest region. So the bullish retest region failed here, and then you got a lower one there, and that one is held, and now you got a hammer reversal, a lot lighter volume. This is exactly the sort of thing you want to see. It says people just don't believe in it anymore, yet the buyers are more active than the sellers. And that's ideally, that's exactly what you want to see. Now I want to go to look at, and let me pull this over out of the way. I want to go look at the stocks, and I'm going to start with the main one, CCJ, right? This is Cameco. This is the one all the funds go into. If you look at it on the monthly, it's got a couple swing point lows that are congruent. It did get down, it did test them, but it's got a reversal, a hammer reversal back to the upside. So everything's still in order there. It is extended, but we've seen over the years that extensions can happen on the long term to the bullish side and stay that way for a long time. What I really care about is breaking a swing point low. Here was a break, this one broke this swing point low, retest regen is there, and it's almost to it. So I would want to see Cameco get over that. That would tell me that this downtrend is over. Yeah, and that's what I want to see. And we could look at the daily. It's already done it there. And so anyway, you see it happen over here first, and I'll just point it out while I'm here. The lowest swing point low was here. You just got over it. You broke a swing point high as well. You had another swing point low right there, and just like we saw with the others, is probably going for the highs that are up here, as we saw with URNM. Now let's go down the list and look at some of these others. I'll go to NXC next. NXC, you can see here you got a long way to go, not nearly as strong as Cameco, and you can see over here it actually broke those congruent swing point lows, right, to take this thing bearish. This one just doesn't interest me as much given how bearish it is. One of the comments was about PDN.TO, the Toronto listing. Big gap up 2 or 3 days in a row now. So it pulled out, what, 23% this week. Got a hammer reversal as well, but on higher volume. This chart doesn't interest me as much, and primarily because it's young and a lot can happen with a young stock. So this is not one that I would be chasing for sure, although I would, keep monitoring it. Let's go to a couple more. URA, looking at it on the long term, just like Cameco, came down, tested swing point low, held, got a hammer reversal. This one also failed on a bullish retest regen here, and it broke a swing point low as well. And so this one's going to take a little work to get back to the upside. Not as much damage as the prior one, but a little bit more damaged. If we look at it here on the weekly, you got a swing point low high there. So that's a retest regen that can get back over it. So these all look like they're doing the same sort of thing. They're coming back after being left for dead. URG, let's see what that one looks like. Much weaker. This one doesn't interest me very much. I'm not going to spend time on it. UROY, also much weaker, all the way down, broke swing point low. Doesn't look that interesting. Now, there's two more here I want to talk about, but before I do that, I want to show you something else. I have a bunch of reports that members have access to, and even you, if you just come over and register, you'll be able to see these things. And this is the CAGR, the compounded annual growth rate. And if you look at it, and I've sorted it by industry, two of the uranium stocks show up. Here they are here. And so this only shows you stocks that have a CAGR over the last 3 years over 20%. And you can see the kind of action that you've had on these two smaller stocks. And so that interests me, because that's a sort of one of the things that I look at to say, hey, does this thing have a long way to run potentially? So let's look at those two stocks. Here's UEC. If we look at it, you can see your swing point high here. There's the low, retest regen. It's held, hammer reversal. I like this one. I like the way it's set up. Nothing's extended, and you've got some already some confirmed ABCDs up, and one of them fairly high, 14, right? What is it doing on the weekly? Well, it never quite got under that swing point low, and so it never reset. 1, 2, 3. It never reset. So the only swing point low that's out there is this one way up here, right? So it'd have to go all the way back to the top basically to break out of the retest regen. Strong stock, right? Looks great. I like it. If I go to the other one, which is more risky, UUUU, which is the energy fuels, these guys also are getting a boost because of the mining that Trump is trying to get going with rare earths, and they have a foothold there with some processing capabilities that they've proven that they can do. They just need to scale. This one, much more risky, as you can see. It's already broken swing point lows. These are on the long-term time frames, so it's broken 2 out of 3. Actually, it's broken all 3 of them, so it has to get back over all of them. So if I draw the tops in of those swing point lows, those are the bearish regens. I would be really interested in this if it can start getting over these tops. Primarily get over this one first, which is around the 550 mark. Let's go look on the weekly. 550 mark takes you right into this area, and so you got to get over that. That's a break of a swing point high in order to do it. But what has it already done? It's already gotten over a bearish retest region, and it was testing the second one, was unable to get over it. So it's doing some backing and filling is what it's doing. I'd be very interested in it if I wanted to do speculative stuff and trying to buy this area on the idea that it's going to retest and work higher. If I go to the weekly, I mean the daily, there it's already gotten over swing point highs. There it's actually changed to bullish already. And so you've got bearish out here, bullish there. You're starting to get the turn, right? And that's what you want to see. So I like the way those two CAGR stocks are set up and the possibilities that they have within them. So in general, in conclusion, the turn's here, folks. I mean, it's starting to take place. Is it going to take time? Yeah, it probably will. I expect that it will do exactly that. But if uranium make the turn itself, it's going to take these stocks with them. And it looks like it's doing it, as you can see in this other video that I have up here. Okay? Well, that's it. Have a good one. Take care. See you next time.